Hello and welcome to Livewire's Alternative Series for 2024. My name is Chris Conway. Macquarie Asset Management believes we're at an exciting acceleration point for renewables and that there is a multi-decade opportunity ahead. To find out what is driving that opportunity, I am joined by Elise Vaudour, who is the Head of Wealth for Macquarie Asset Management Green Investments. Elise, thanks so much for joining us today.
Thanks, Chris.
Elise, why is Macquarie so committed to investing in green energy infrastructure?
Well, first, we believe this is the largest infrastructure investment opportunity and for decades to come. And that's driven by really strong demand. For example, from digitalization, we hear a lot about data centers, power consumption, or artificial intelligence, right? There are roughly 150 countries and thousands of corporates which have committed to net zero operations by 2050. And we've been investing in the space since 2005. We're the world's largest infrastructure manager with a team of 400 infrastructure investment professionals, including more than 100 green investing dedicated professionals. We actually believe that adding infrastructure to a traditional portfolio can improve returns and lower volatility. And we believe we can create value by creating new energy infrastructure assets and also by contributing to create energy companies of the future. So all in all, we think we are very well placed to capitalize on this very large opportunity and also be a market leader in the space.
Elise, there were some very big numbers in there. How big is the size of the investment opportunity in terms of the dollars that might be spent in coming decades? And where do you think we are in that cycle?
Yeah, it's quite overwhelming, actually. When you look at it, it's forecasted that more than 190 trillion US dollars are required by 2050 to meet the net zero ambitions. That's more than 6 trillion US dollars a year, every year. And that means tripling the last year's investments. So extremely significant, really. Where are we in that journey? Well, what we see is that we're really now at a moment of acceleration, which is good news. And what that means is that we need to focus on deploying this clean energy quickly and at scale. And we believe, for example, renewables like wind and solar are actually a really good and fast and, competitive means to deploy clean energy for these short-term and medium-term goals.
Elise, green investments faced some headwinds in recent years. Can you just talk us through what happened and are you seeing any green shoots?
Indeed, the industry has faced challenges in recent years, supply chain vulnerabilities, some costs, of course, inflationary pressures that have been seen as well in other industries, political pressure, and also grid connections, But interestingly, what we see now is because of the very strong demand we've already discussed, that's driven by a number of key factors, and that is here to stay for decades, we believe. The developers, the producers of this clean energy have been able to secure higher offtake prices, meaning their revenues, basically. What we've seen as well is the supply chains continuing their technology advancements and continuing to produce at scale. And we've also seen that when you look at well-structured brownfield assets, they've showcased some, long-term stable cash flows despite these market disruptions and despite these inflationary pressures. So we've seen, the markets really adapting to these challenges. And we actually believe that because of the very strong demand we're seeing, we are now in front of a multi-decade growth opportunity that we really want to capture.
Elise, you spoke about some of the challenges that have been overcome. What are some of the misconceptions still in the green energy space?
Yeah, there are a few misconceptions. One of them is actually interesting, and we spend quite a bit of time explaining this and discussing this, is the fact that investors would have to choose between financial performance, between returns, and delivering green impact. And it can be true indeed, but actually for our strategies, the way we invest, because we invest in business models that are delivering and businesses that are delivering clean energy, they actually go hand in hand. And let me take a very simple example. Say we invest in a solar farm or a wind farm. Well, everything else being equal, the more the solar farm or the wind farm produces clean energy, better financial performance, right? Which goes to returns for investors. At the same time, the more the solar farm or the wind farm produces clean energy, the more emission reductions, which delivers green impact. So it's a virtuous circle, actually. It's not like seeking to deliver green impact at the detriment of financial performance.
Elise, this one's a big question, but is the world decarbonising fast enough?
Yeah, that's the big question, right? Clearly, when you see that we need to invest more than 190 trillion US dollars by 2050, is that even possible, is a question that comes to mind, right? But clearly, here the point is we need to deploy these clean energies quickly and at scale. And that's where we feel that renewables, for example, wind and solar, really have to come and play their part in the deployment of short to medium term targets, right, and the ambitions. And when we look at the forecasts, we see that wind and solar are expected to basically represent 70% of the electricity generation by 2050, while today, or last year, it only represented 13%. So there is a long way to go, and that's where we think, as an investor, we have a role to play as well.
Elise, you touched on it there. Corporations and governments around the world are starting to decarbonise, some faster than others, of course. What are the major themes that you're seeing and perhaps some of the tailwinds that are driving it?
Yeah, there are very significant tailwinds, macro tailwinds that are driving the energy transition, and we believe provide for a multi-decade growth opportunity. The first one I'll mention is really renewables are the cheapest form of electricity for roughly 90% of the global demand. So it's very much the economic argument, right? Then, of course, governments all around the world are providing, supporting policies. We see that in many regions. In Australia, of course, the Australian Climate Change Bill, that's legislating for a 43% reduction in emissions by 2030 and reaching net zero at the federal level by 2050. Through 82% of renewables, really by 2030. Yeah, and also the supporting schemes to, expand and improve the grids, for example, because the infrastructure needs to follow, right? And these governments all around the world are, of course, providing these supporting policies because of net zero targets, but also because of concerns around energy security, around energy independence. And then you have the corporates. In 2023, more than 4,400 corporates have communicated net zero targets. That's more than double the year before. So it's really happening at the corporate level, again, because of these net zero targets, but also, again, because of energy security, reliability, right? And in Australia, 80% of the market capitalization of the ASX 200 have communicated net zero targets. And then more simply, you see this very strong demand that's driven by electrification. We see it in our lives, right? We see it, electrification of transport, electrification of industry, and almost the most obvious one, digitalization. We hear a lot about data centers, we hear a lot about artificial intelligence, right? That's driving an exponential growth in power consumption. Actually, the International Energy Agency had forecasted that between 2022 and 2026, they would expect a doubling of the power consumption of data centers. What does that mean? Well, it would be equivalent to the consumption of an economy the size, basically between the size of Sweden and Germany.
Elise, I want to focus on how you invest specifically. How do you identify opportunities and what factors are really important?
The key factors we look at when we assess opportunities, the first filter probably, is we look for the infrastructure characteristics, right, in line with our objectives. So we look for yield, recurring income, capital growth, diversification, inflation hedge, the typical attributes of an infrastructure investment. And then we probably use mainly three key criteria. The first one being the portfolio fit. So that's the risk return profile, that's the diversification element, that's the fundamental merits of the investment. The second one being really looking at the characteristics of an investment in line with the mandates, the objectives, including our green objectives. We have a green framework. And the third one being trying to secure some significant influence, some kind of control or governance, because our thesis is a thesis of value creation. And so we need enough influence to be able to drive that value creation, basically.
Elise, you mentioned brownfield projects earlier. What's the difference between greenfield and brownfield?
Yeah, so greenfield, to put it simply, it's creating new assets. So it's an asset that still has to go through the entire life cycle, the development life cycle. And what that means, for example, for a solar farm or a wind farm, it means identifying a site, securing a site, securing permits, securing the procurement, organizing and structuring the construction, entering into the revenue contracts, the offtakes we discussed earlier, and then actually building it and actually operating it. A brownfield asset is an asset that is already operational, that is operating. And at Macquarie Asset Management, we have experience across the whole spectrum. And our strategies are really meant to invest across the whole spectrum. We think that brings some resilience across market cycles, and also that gives us a tool for value creation. For greenfield assets, these are typically higher risk. We have the experience to manage these risks and to create that value. And for example, in a higher returning environment, with these types of assets, well structured, you could secure higher offtake prices, higher revenues. For a brownfield asset, usually lower risk, already operating, you would see stable cash flows, some inflation correlation, some hedged debt. So the attributes of an infrastructure investment.
Elise, last question. Can you take us through an actual investment that best exemplifies the opportunity in green infrastructure?
Well, I have to take an Australian example
Great.
then, right? So there is a business called Ola. We actually communicated at the back end of last year. It's a really exciting business for us. It showcases quite a few of the characteristics we've discussed. It's basically a non-shore renewable business, a diversified business across 5 states currently, that has built a portfolio of solar, wind, and battery storage over time. That represents 3.7 gigawatt. Now, what does that mean, right? Just to put things in perspective, we have other strategies were actually a bit below that, more around a bit more than 3 gigawatts. And when you translate that into expected generation over a year, that represents roughly the domestic demand of Western Australia.
Wow, okay.
And so we're developing these projects, but we actually built the business. We actually hired a team of 25 people, including a very experienced CEO with 20 years experience in the industry. We put together the business frameworks, the risk management framework, the governance framework, and then we worked to go through this development life cycle we've discussed, as a greenfield asset goes through. And these assets have already gone through significant de-risking milestones. And now we're seeking to develop the business. The ambition is to create an independent power producer. So one of the energy companies of the future we were discussing for the Australian market.
Elise, thank you so much for sitting down with Livewire and taking our viewers through the opportunity in green infrastructure.
Thanks, Chris.
If you enjoyed that interview as much as I did, make sure to give it a like and don't forget to follow our YouTube channel because we're adding lots of great content every single week.